first I just want to do a little introduction and talk about who is here in the room. So most of you are familiar with me. I'm Ingrid Heilke, and I lead the programs for Profit First and Financial Mastery for the White Dress Society in BBG. Beth is the founder of the White Dress Society, who introduced me to most of you, and is amazing. And she's joining us for this 12 o'clock session to ask some tough questions or throw in, whatever knowledge she has. And Danielle Hayden is, do I have this all right? Danielle Hayden is CPA and I had just realized I was spelling error. I kind of threw this together right before, but she is CPA. She's going to be our bookkeeping guru. She also is a CFO like myself for small business owners and has bridal clients. So she's in here to weigh in on a lot of your questions. And Bet is also a Profit First professional like myself. She really focuses on taxes, tax planning, tax filing, and so she'll weigh in on a lot of the tax questions. And so I think that we have a well-balanced team here to answer a lot of the questions. We have a lot of overlap in our expertise, which is great. But in terms of the kind of work that we're taking on for the clients that decide to work with us, we kind of have a divide and conquer approach. And this session is really probably too long in coming, but as I've been working with a lot of you, I have had to put a hold on accepting accounting clients because I've really been focusing on guiding you through Profit First and guiding you through a lot of that. And I answer a lot of the accounting questions in the program, but now we've gotten to the point where we've been able to kind of open up that capacity a little bit more. And with tax season here, it's natural that a lot of those questions come through at this time, even though we kind of like to have just the financial health happen throughout the year. But so this was a good time to just kind of open up and take these questions and get everybody going. So without further ado, I did want to put out the caveat too, that basically what we're doing, we took some advanced questions and we're going to answer them in somewhat general terms, but we do have to put the caveat that we're answering them. Essentially, we're going to give you some best practices, but it is pretty impossible to give you the correct answer because everybody's situation is different. And I know you don't really want to hear about this. You don't really want to hear this. You want the answer right now. But we do have to say that everybody's situation is different. Your context is different. Your tax situation is different. Your family situation is different. So we can kind of give you the general idea, and we're going to try to do that as much as possible for bridal stores. But we can't give you specific tax advice that you can take and implement, but we can try to guide you towards a better understanding. And the other thing that I wanted to say before we get started is that this is here for everybody, regardless of whether you're working with us or not working with us. And my intent was really to just do that, provide this for anybody. Some of you are doing your accounting by yourself. Some of you are working with somebody that you're totally happy with. Some of you have reached out to me and were just waiting to work with us. So I will follow up with an email if you want to book a discovery call with me for those of you that really want to move forward and want support. So I will follow up with that, but this is here for everybody, regardless of your situation and if your brother's doing your accounting or whatever it is. So I think most of you know my feelings on that, but Okay, so what I did was, for those of you that submitted advanced questions, thank you very much, because that really helps us kind of take those questions, organize them, and then provide more intelligent responses to them, and actually have things that are a little bit more grounded and less theoretical, as much as I can kind of know what the buckets are. So what I'm going to do is I'm going to put those questions up here, and then we are going to respond to them. Oh, let me back up a minute. I'm going to stop sharing my screen and just draw your attention to that there is a Q&A button down at the bottom. If you look down to the bottom of your screen, you'll see Q&A. So you might have to move your cursor down to the bottom for that panel to pull up. So you'll see that there's a Q&A down there. And I'm going to, at the end of each segment, I'm going to go back and check on the Q&A. I'm going to be facilitating this, so I'm kind of going back and forth. So you'll have to forgive me for doing that. I kind of only have so many chambers of my brain that I can operate. But so I'll go back and I will check on the Q&A, so that if you kind of have follow-up questions to what we're talking about, I'll check on that and see what we can do. Also trying to be mindful of time. So we're going to go through each section, and then we will open it up for a more general Q&A at the end. And I did promise everybody that submitted advanced questions that we were going to get to their questions in here. I'm presenting them all anonymously. So we're going to give priority to those, and then we will open it up for anybody that submits within the webinar. So let me pull this back up. And is everybody able to see? I'm going to look at you can also put things in the comments, but you can put in the comments right now, but is everybody able to see? I'm watching the comments. Is everybody able to see the Q&A? Is anybody not able to see it? Are we all good there? I don't see any comments, so yes. I see yes. Okay. Okay, so I'm gonna keep moving forward because I don't see anything else. Okay. Share my screen again. Okay, so our first couple questions, there's a couple questions in here about store samples. And with each of these, I'll look at the questions and we'll go through. And Beth, please chime in. We're going to go through, I'll kind of give an overview. Danielle and Beth will chime in and I'll facilitate. And Beth, if you have any kind of nuance to add, please jump in.
Okay.
So the first question we had was, should the store samples be entered in QuickBooks as cost of goods sold or as other current assets? And, oh shoot, I don't have my comments in here. So this is fairly standard. Danielle, you had put something in our notes, so why don't you start with this?
Yeah, absolutely. So we try to make it a best practice for all of our bridal clients to make sure that the samples are set as a current asset. It's really important that these are being shown as an inventory item. When you, and we can get to this later, but when you choose to make a change with those samples, that would be moved to cost of goods sold. But while you're holding the inventory in your store, that would be considered a current asset, which is held on your balance sheet as inventory.
Yeah, so, and I'll tell you that what I saw and I had, in my poll, I had a question to see how many people were doing this or not. But what I saw when I was doing people's profit assessments and rollout plans for Profit First is a lot of variability in this in terms of whether people were actually listing their samples in whether people were actually breaking out their samples at all from their reorders in their financials. And even apart from being able to expense them later on, you actually want to see the difference between your samples and your reorders, because your samples are doing a different job in your business from your reorders. Like the reorders are the workhorse of your business. Like that's where you're generating all of your profits. That's where your profit margins are. Whereas your samples they're a marketing tool for you. So even aside from your samples being on the balance sheet and, the reorders being on the profit and loss statement and even where they are, they should be separate, because when they're not separate, you can't tell where you're spending your money. And then you won't be able to break down your profit margins on your reorders versus your sample.
So then just for clarification, if we were to, because I don't divide them out that way at all. We look at, my accountant has me look at my inventory as a current asset, as an inventory item. But if I were going to break out my samples versus my reorders, meaning the gowns that I have coming in for brides, how would that be reflected in QuickBooks, for example? Like how would you, from a bookkeeping perspective, how should you categorize them though? Because right now, for me, they're all, well, I guess my reorders are cost of goods sold.
Are they all in inventory, or they're all in cost of goods sold?
My reorders are in cost of goods sold.
Okay.
My samples are in inventory. So
okay,
I guess they are divided out then.
Are you on a cash? So if you're on a cash basis accounting system, that would mean that when you purchase your reorder, you're claiming that expense. So
Correct.
I would suggest when you make that order, you could do it as a separate order, or as the same order, but take that cost of those samples and categorize those as an inventory item on the balance sheet rather than a cost of goods sold. And keeping in mind, ladies, you can have more than one cost of goods sold account, and you can have more than one asset account. So if you are reordering a set of dresses, and if you are not on a cash basis system, if you are on an accrual and you are considering all of your dresses as inventory, you can have two accounts. You can have one account for your sales inventory, and you can have another account for your samples, both in the inventory category. So you can have multiple accounts.
And if I remember correctly, Beth, from your financials, I may not be remembering correctly because I've looked at them, so forgive me. But yeah, so you have your inventory asset. Now, you may have a separate line where you actually are expensing your where you're expensing your asset when you dispose of those.
Yeah, he has an inventory. Yes, we have like an inventory disposal area. Yes, yeah. So when I donate them or sell them, we keep track of that.
Right. So that would be your inventory asset. Your cost of goods sold, those are your reorders.
Right.
Yeah.
Exactly. That's okay. Perfect. Good. Mm-hmm. Because there are quite a few people, and I'd be curious to see if people can put it in the comments which way they're doing it, because there are a lot of bridal stores out there that actually depreciate their inventory. So can you guys speak a little bit to that and why that would be good or not good to do?
We do have that as a later question.
Okay. I'm jumping ahead. Sorry. Because it's a constant conversation every time we get together at the retreat, or I'm sure in the Financial Mastery series, people are always asking that question. Do I depreciate my inventory, or do I do which is what we do, which is just write it off once we sell it or donate it?
But do you want to speak to that right now? Since it's
we can try. Let me step back a second. I don't know how many people follow things like tax news, but for 2018, a lot of rules changed, like so many changes. And, even as a tax CPA, our heads are a little bit spinning, and the IRS doesn't provide a lot of guidance. And some of it isn't going to even really be ironed out until there are some cases that go through tax court and some precedents set. But that takes a long time, and we don't have a long time right now to kind of deal with some of these issues. Now, one of the interesting things was, retail, a lot of times you kind of got forced into accrual tax reporting if you aren't really that big, but they changed the rules now for 2018, where I believe the threshold was like 25 million in sales. If you're under that, you can use some kind of cash basis for your tax reporting. So in this case, you've got your books that are going to end up being on the accrual system for the most part, but your taxes might be cash. And that's where you're going to have even more questions about, what do we do with samples? How should we put them on our books? Because, and this actually leads into what we were talking about as far as putting together a separate inventory item for the samples. Because if you fall under that 25 million threshold, it's totally acceptable to just expense those samples that you're maybe putting on your books and inventory, to expense them for your taxes as a cost of sales. So the more specific you can keep these records, the better you're going to be when it comes time to do your taxes. And the reason that's useful is, if you've got $10,000 tied up in sample dresses, well, you might be able to take that as an expense, more or less. It's not exactly an expense when it's a cost of sale, but for our purposes here, we'll call it an expense. You're going to reduce your income by $10,000 in that year when you buy them. So that can be huge. As far as specifically the depreciation, I would imagine the year that you buy them, you're going to use something that, there's different ways of depreciating things. There are special rules. You're either going to use what we call a Section 179 or a bonus depreciation, which will let you accelerate the depreciation all in the first year. So you could leave it on your books and say, okay, these are my sample inventory, or we're going to depreciate them. Really, technically depreciate inventory. It's more of like a fixed asset, to be very technical, but you would depreciate that over a few years. Instead, you can take it all. Again, it effectively would be an expense. It would offset your income in that year. So for some of the smaller businesses, these are huge and very beneficial tax changes, but you have to have the good record so that whenever you go to your CPA or whoever's doing your taxes, that you can specifically point to these different accounts, like this account is for this account is for that, and they will know how to treat it. If you lump everything in inventory, you're going to lose out on a lot of that benefit, because we can't tell just by looking at the kind of inventory number. We won't see that detail, and we won't know to even ask those questions of, oh, is this something we can really expense? Is this something that we can offset your income this year? You can't tell when your categories are too broad and you dump too many things into a broad category.
So I want to kind of reiterate some of what you said, Bet, and do a little bit of interpretation, because there's a lot of information there. And when
yes. I know, I'm sorry, it's like a fire hose.
Yeah, when information is new, it can be a little bit hard to take it all in at once.
Absolutely.
So, one of the points is that when somebody's bookkeeping, when somebody's accounting is not necessarily, there's different levels of good accounting. There's different levels of accounting. And the better somebody's accounting is, that effect, or the accounting, good accounting enables better decision making, both in kind of the day-to-day for the business owner, but then also for the CPA when it comes time to do taxes. So you as the CPA, if you have the chart of accounts, and what I mean by chart of accounts is the chart of accounts are all those categories within QuickBooks. And so for people in my program, one of the next upcoming lessons is actually chart of account redesign, which a lot of people are excited about, because they're like, oh, now I can know how to redesign my chart of accounts for Bridal, where I can get the right get the answers to the questions that I'm asking. But, so that helps with the day-to-day decisions, but it also helps with those year-end decisions, because you are also, as the CPA, as the tax advisor, one of the decision makers for the business. You're making the decisions on, basically the tax strategy. So when you come in and you don't have enough information to make a decision, then you basically don't know which way to go, in the same way that the business owner might not know which way to go if they don't have the right financial data. So sometimes it's hard to make those decisions. When you have all the right information, you can make more granular decisions going forward. Is that fair?
Totally fair.
I think that's such good advice. So important to remember.
So I think this second question says we're new to the industry as well as retail. When we buy samples, are those an expense, or we put them in inventory? So I think that kind of encapsulated that for some people, having them as an inventory asset will be the right answer, and for some people it won't. But it really kind of depends on what the overall picture is, which I know people hate, like it depends. But part of it is, from what Beth is saying, is that, from year to year, what your strategy is going to depend on how profitable are you, and what do you want to what do you want to show in expenses? Do you actually want to be showing more expense in that year, or do you want to carry over depreciations, that kind of thing? Am I right, Bet? Is that fair?
Yeah. I mean, as much as you can manage your earnings, you have a better ability to do it. Not earnings, but your taxable income, really, is what I mean. The more detail you have, the better able we are to pick and choose how to treat items, and to the extent that the IRS lets you. But the more information you have, the more easier it is to make those decisions. So when you don't have information, it's we kind of make our best guess. And if you're coming to a CPA, say like on March 5th, and you're trying to get these answers, we don't have the time to really sit there and dig into it to that level. If you come and you've already got it broken out, we can go through and look. And I mean, I don't know if the standard that I operate at is the same as everybody else, but I look through my clients' transactions, not at like a super detailed level, but sometimes they put weird things into weird categories, and you start to ask questions. If you can answer those questions ahead of time, if you can say like, oh, this is, an inventory item, but it's just my samples, I don't have to go and spend the extra time and try to kind of pull that information out of you. If you can do it ahead of time and it's already there, and it changes the conversation to more of a planning than a what the hell is happening discussion, which it sets up a better frame of mind overall. You look more sophisticated first off as a client, and then you're helping the CPA, and they're like, oh, we can make some strategic decisions because you know what's happening in your business, and you can answer these questions because you already set your books up properly.
Yeah. So a rule of thumb would you suggest would just be, no matter what, whether it's an expense or an inventory asset, make sure that those samples are separated, and then be able to have that conversation at the end of the year.
That's across the board. Definitely separating out the reorders from the samples. That's going to help overall. And I think that the takeaway here is that in any case, having the chart of accounts that is specific to bridal is going to help. And I will give my very quick rules of thumb here for the chart of accounts, is that it's basically doing, this is going to be my really quick and dirty on the chart of accounts, but the mistake that I see a lot of people making with the chart of accounts is that they do one of two things. They'll take the chart of accounts that QuickBooks gives them, or they will take the chart of accounts that their CPA gives them, which may or may not be relevant to their business. So the chart of accounts does a couple things. It helps in your, like I said, in your daily, monthly decision making as a business owner, and it's there for compliance reasons. So tax or, whatever other things you need to comply with. So it needs to answer compliance questions, but also needs to answer your questions as a business owner. Now, in bridal, there's going to be some questions that are kind of relevant across bridal stores. And then there's other questions that are very specific to you as the business owner. So going through that chart of accounts and designing it in a way that is going to answer those questions, because the chart of accounts feeds out to your reports. That's what controls the reports. Those categories, when you're categorizing the transactions that are coming in, it's going to feed, it's going to control what you see in your profit and loss in your balance sheet. So designing the chart of accounts, and most people are afraid to do this, so I'm giving you permission. I'm not giving you permission necessarily to go in if you don't know what you're doing, but that you actually want a chart of accounts that is designed specifically for your business. So whether if you are able to redesign your chart of accounts, or at least to have your accountant do it, but and if you're in my program, then we're doing this together. But to actually have it designed in a way that it's going to break down those categories so that they're answering your questions. And I think to Bet's point earlier, that there is a balance between having categories that are too general and too specific. So if those categories are too general, what happens is you don't have enough detail. If they're too specific, what happens is that you do not, that you're going to run into problems in terms of coding the transaction, categorizing the transaction. So either you or your accountant will run into problems in that they will not have enough information to put things into the right categories. So that's my spiel on the chart of accounts. And let's move forward to the next question. Although I do want to check in. Unfortunately, I have to unshare. Oh, hello. I need to unshare my screen in order to check the comments, but I do want to quickly check the comments. Okay, so yes, but do you have a separate cost of goods sold accounts for samples versus reorders? So
this was somebody was trying to clarify how my business was broken out.
Okay.
Of assets versus expense of inventory.
And then there's a question about should your inventory be broken down to bridal gown inventory, bridesmaids, jewelry, etc. And so that just depends on you and if that information is useful to you. Whether that's
I think it's important because I think it's always important to look at your percentage of sales to percentage of inventory of a category. Whether you're doing it on an accounting level or you're just doing it, like if you have Bridal Live, for example, if you're just running a report and seeing that number. But I think it's important to have visibility to inventory by category. Yeah, and I definitely, with your cost of goods sold, definitely break those down in your cost of goods sold. And then, it is most likely helpful to see it in inventory. Some people use a separate inventory app that tracks inventory. So probably breaking those down is helpful as well, depending on how you're carrying that inventory. And I also I'll say one more thing about that, and then I want to move on. But in your chart of accounts, I like to have the income broken down by, for example, gowns, bridesmaids, accessories, however your sales are broken down, and have that mirrored in the cost of goods sold so that you can see your sales versus cost of goods sold like 1-to-1 so that you can see the margins on those in your reporting. Okay. Now, let me just check the questions. Okay, nobody's putting in questions, they're putting in the comments. But if you do put it in the questions, it's easier for me to kind of... I don't know that we're able to put, at least maybe because I'm a panelist, but I went in to try to do a test and there's no place where it allows me to start typing the questions. I'm wondering if somebody can comment on that and say if they're having the same problem.
attendees should be able to ask.
Okay, so maybe it's just because I'm a panelist.
But I did do test Greta. Hi, Greta. Okay, so there's questions. I'll keep
the only other, I don't want to interrupt, Ingrid, but really quickly, there are people on the White Dress Society that are trying to get in here, and the link that you gave me is not working. And I tried to send them a link directly from here, but they're not able to connect. So is there a way, can you just maybe put the link in the comments and I'll reshare it? They're not able to get in for some reason.
Good.
I'm getting crazy text messages.
Okay, invite. I posted it. That's not good. Okay, well, I hope they can get in.
All right, perfect. I'll try with this. Thank you.
And there's the other one at 7 if they want to join that one.
Okay.
Okay. Okay, I'm going to share again. See the next question. So some of these we already started getting into, but with discontinued inventory disposal. So I want to expense my samples so I can dispose of them when they become discontinued or just aren't selling. I don't find that sample sales work for my store. I wonder if this is, and I want to say here that most people are doing sample sales or selling off the rack or some variation on that. So I think that this is a little bit of an outlier, but I wonder if this is a good or bad idea. I have heard that some stores do this. So in terms of, I think that we talked about this, but so this person is not saying whether they have it as a, they're not saying whether they have it as an inventory asset, but I think it's implied here. But I think that this is, I think we pretty much addressed this as, basically expensing. I think Danielle, you put some notes in here, but basically expensing it once if it's an asset, then moving it over to the P&L and expensing it. Do you want to talk about that?
Yeah, I think it depends on how you are classifying it when you're purchasing your inventory. But as long as you are purchasing when you purchase that sample inventory, as long as you're putting it as an asset on the balance sheet at the time that you choose to dispose of it, or if you choose to donate it, at that point you can expense that piece of inventory and move it to, as we recommended before, a account on your profit and loss statement that will allow you to expense it, but continue to keep those costs separate from your reorder cost of goods sold.
Yeah. Yeah. So I think that last point is the important point of keeping it separate.
Keeping it separate,
cost of goods sold. So you basically don't want it just feeding in and showing up as your reorder cost of goods sold up there. It's actually going to be showing up as, and I recommend actually having it, if it's consigned, if it's disposed, so however you disposed of it. Would you agree with that, Bet?
The only issue with disposing for these samples is if you're going to donate them. And the reason being 2018, this goes back to the big tax changes for 2018, depending on how your business is structured. So what type of entity are you? Are you an LLC? Are you a partnership? Are you an S corporation? Or are you a C corporation? And then if you are one of the LLC, partnership, or S corporation, what do your own personal taxes look like? Donating of those items can have a huge ramification, either good or useless. And I hate to say it depends, but it really does depend on your own personal situation. So it goes even beyond the step of what happens in the business, because for those folks, you have to really look at what's going on in my personal taxes. And the reason for that is the standard deduction went from like 6,300-ish for an individual to 12,000. And then if you're filing married jointly to 24,000, if you're not itemizing a huge amount of on your personal return, I'm talking about, if you're not itemizing to a huge amount, so if you don't own a home with a mortgage, if you don't have real estate taxes, if you don't have other not deductions but charitable contributions, and you don't do this tax planning, like this is such serious tax planning, it's worth whatever you pay your CPA to figure this out for you if you're thinking of going this route. Because if you're not beating that standard deduction and you decide to donate this inventory, I mean, now it's a little late for 2018, but going forward, you can still do this math. You could donate it thinking you're going to get a huge write-off, and you could end up not having to itemize because you don't meet the threshold. So it used to be, and I even had a client last year who donated a ton he wasn't bridal, he has like watches, donated hundreds of thousands of dollars of inventory, and he did it specifically in 2017 because he knew 2018 he wouldn't be able to do it and get the same benefit. So, if you can deduct it as like written off, if you can sell it, that's obviously better, but be super careful with the donating at this point. It can be, I don't want to say catastrophic, but it could be, you could think you're getting something really beneficial and it could end up being a terrible mistake, which you won't know unless you do a lot of planning. And this is not an easy question to answer. There's a lot of different things that go into that decision, but just don't think that, I can just donate it and it'll be gone and I'll get the write-off, because it might not work that way anymore. If you can sell it, I think that's the best. Even if you're doing a fire sale or a liquidation sale and you're selling it for, pennies on the dollar of what you paid for it, at least you can harvest that, harvest those losses. Or if you're just writing it off because it's no good anymore. Just, you gotta make sure also that you're not, if you put it initially as a cost of good, don't write it off and put it as a cost of good again, because you're basically double dipping at that point. It would be only the cost of good that first time when you first bought it, because you don't want to end up in a situation where you're like, I spent $10,000 on samples, 3 years ago. I'm getting rid of them. I'm going to take another $10,000, because that's when the IRS gets upset with you, and you don't want to do that.
Yeah. So there's a couple things here that I just want to summarize, which is, one, be very clear when you're moving it from your balance sheet. If you're treating it as inventory, be very clear on specifically what you did with that. So when you're moving it over, and we have another question here, so don't, and Bet just gave the caveats on donating, but did you consign it? Did you donate it? Did you sell it at a sample sale? And having those specific lines on your P&L to know exactly what you did with those is going to be helpful then when you go to your accountant. The other point here is go from the highest value down to the lowest. So the goal is always maximizing the margins on your samples. Like we like to say, like, don't let the tax tail wag the dog, right? Bet will say it, I will say it, Danielle will say it. Like,
absolutely.
So, the goal is always just maximizing the margins. And probably I was going to make this point later, but like, I see this over and over with bridal stores, is making the mistake of thinking of your samples in the same category as your reorders. And what ends up happening there is that people are holding on to their inventory, to their sample inventory for way too long, which is kind of getting off topic here a little bit. But what ends up happening is people are holding on to inventory for way too long until it becomes totally worthless. So and I know that Beth can speak to this, but get rid of it before it is totally worthless so that you can actually make something on those samples instead of just cutting them up and throwing them in the trash.
Yeah, absolutely.
Or thinking I can donate it and make some money when you actually can't. So I'm going to step off and check the comments. And
Ingrid, Greta had posted that she was asking if I said that the max write-off for married filing jointly is $24,000. Let me clarify, that's the new standard deduction. So if you don't itemize, if you don't want to be bothered with it, if you don't have more itemized deductions, then the standard by default you'll get $24,000, which is it's about double what it used to be. So it's a huge difference when it comes to your tax planning. It's enormous. It's changing everything for everyone. But it's not the maximum.
And just can I just ask people here, do people know what the difference between standard deduction and itemized deductions are?
No.
I'll just throw that out there, and then if anybody needs clarification on that. I mean, that's much more of a general question than a bridal specific question, but I'm just reading this question here. If it's inventory and an asset on the balance sheet, do I create a new chart of account number, and for discontinued, damaged, etc.? How do I do this? My accountant said it's better to get 100 for them versus writing them off because of my tax bracket. So, I mean, first of all, there's one little thing in here that I'm going to say with QuickBooks. Like, I'm not a big fan of using numbers anymore. I think they're antiquated. That's just me. I think that they end up being cumbersome when you go to redesign your chart of accounts. But
oh, you mean numbers, meaning account numbers?
In your account numbers, yeah.
Yeah.
I was like, what do you mean you're not a fan of numbers? What are you saying?
It's very true though. If you can use the names, it makes it much easier.
I didn't even know that was an option.
Because it used to be in accounting system, well, and particularly for large corporate, they make sense for large corporations because you have like different divisions, you add in numbers. What she's saying, because you have the option of having a number in your chart of accounts, because for big corporations, you have a number that goes with every account. So, you have like numbers in your chart of accounts, and with some CPAs, they will automatically assign numbers because their system, they have a general chart of accounts that they give to all of their accounts. And so, then it used to be with data entry, right? Like it made data entry easier. Well, with QuickBooks, with most of the time, like now the way that things work with autofill, it no longer applies, but sometimes people still use numbers. So, but what happens is that if you go to redesign your chart of accounts, then you have to think about the numbers, and then you have to add those in.
Yeah.
It's like, it's a total mess, and it's really not necessary for small businesses. Anyways.
If you have them, it's not the end of the world. You don't have to redesign it without it. But I just think if you're setting up a new system, you don't need to set those up again.
Yeah. It's not the end of the world. Like, don't even worry about it. It's like,
right.
But, anyways, if you see, like, it's a very small thing. And, I mean, and I've had clients that come in with numbers and then we kind of add new accounts and like, don't even worry about it. And it's not even going to change anything about anything.
But regardless of numbers or not numbers, I think what she's asking is, should she create a new chart of account with a label or a number or whatever, one for discontinued, one for damaged, one for donated?
And so I think that I got to that point earlier, that it is very useful for however you disposed of it to see what you're doing. One, for tax reasons, because then Bet would know like, oh, well, how are we going to write this off? Or how are we going to treat this for tax purposes? But the other thing is you want to know like what's happening to my gowns,
right?
Like every year. So that is a number that you can track.
Yeah.
it's huge to be able to track that year over year too.
Mhm.
I mean, if you can see a trend of how much you're disposing, that's huge.
Yeah.
What I do for my accountant is we keep an Excel spreadsheet basically of any time I move anything from my inventory over to a sample. If I move one of my samples I do an activity with my sample, either move it to be sold, send it to a consignment store, or donate it, it goes on a spreadsheet and I list what has happened to it. And then I move it from tab to tab. I move from like, these are my samples that I'm selling on the floor, to we just sent this to a consignment store and it's sold, to this has now been donated. That's sort of how I do it for him. And I send it to him quarterly so he knows what's going on with that number. That's my sample number.
Yeah, so I think every accountant will have a different system that they use to kind of keep track, and it depends on your workflow and their workflow in terms of how to move those over from your balance sheet to your P&L.
Mm-hmm.
And I want to keep moving forward because we are right up against 1 o'clock.
Oh, yeah, we are.
We're going to have to go. Okay, so QuickBooks, and I know there's some more questions in there, so we'll get to those at the end. Bet and Danielle, do you have to head out right at 1?
I have a few minutes.
Okay, I can stay a bit later to keep answering questions if people want to stay on. Okay, so this next one is about QuickBooks, and somebody asked, I would like to know what daily entries I should be making in QuickBooks to record merchandise sales, etc. So I actually wrote this out because I think it might be a little bit hard to follow if I talk through it. And I did kind of a really general answer on this. So there's a lot of writing here. So be prepared. Not the usual way I like to present things, but I didn't have a huge amount of time to actually make a nice, pretty slide. But basically, this can kind of be broken down starting with daily. And your daily is going to start with your point of sale system. I know that most of you are in Bridal Live, so I use this as an example. So starting with Bridal Live, really your daily activities in Bridal Live is closing your pending appointments, but also reconciling payments and balancing the cash in your register. Those are your daily activities. So you might be doing that directly in Bridal Live. If it helps, you could actually create your own, paper version of this. But the other point here is that Bridal Live should be properly mapped to QuickBooks so that the transactions sync or export properly. And I had a question in my poll about which of you are actually interested in moving from QuickBooks Desktop to QBO to QuickBooks Online because as far as Beth told me, their integration is imminent.
Well, not imminent. It's this year. It's in 2019. So okay. Hopefully in the next 6 months.
So, and I'm happy to stay on a little longer. You guys can throw it in the comments. I'll look at it later. But I'm happy to pull up QBO and do a little demo to show you what kind of the benefits of QBO are. For those of you that are looking to convert, we can be ready to help you with that. So that is the daily. And then QuickBooks, this can be done on a weekly or monthly basis. So a lot of people do these activities monthly. So if you're syncing your point of sale, you would be using QuickBooks bank feeds. This, just because of the way you all are set up, you're probably not. You're probably exporting. But what bank feeds are, and I can show you this later, is that it actually pulls your transactions straight into QuickBooks so that you don't have to enter data by hand. I know a lot of you are entering it by hand, which is kind of insane given the way the technology works these days. If you're exporting, I know that some of you aren't even doing this, but this is like the next best thing. You can actually take the file from your bank. Well, from Bridal Live, you export from Bridal Live, import into QuickBooks. But also from your banks and your credit cards, you can export CSV files, import them into QuickBooks. So that just imports your transactions. And then you code those transactions. So with those transactions, you you make sure that they're matching to the correct expense or sales, the correct sales or expense categories, so that everything is going to fit into the right categories. And then finally, you need to reconcile all of your statements. So that means that your all of the transactions in QuickBooks are matched against what's actually happening in the bank. So by reconciling your statements, it means that all of the records in QuickBooks match what the statement says is happening in your bank or your credit card or your point of sale system. And then finally, this is something that a lot of people skip, but it is so, so important, that once you reconcile everything, you actually want to do a check. You want to, in each account, filter for unreconciled transactions and make sure that there's no unreconciled transactions in any of your accounts. And unless they're outstanding checks. And the reason that this is really important is that if there is unreconciled transactions, that means that there are transactions in your QuickBooks that don't belong there. And I have seen in accounts coming into me, there's unreconciled transactions going back for years and years. And I've seen audits because of this. I've seen just people not knowing what is going on with their books. It means that it's just all kinds of trouble can happen because of this. So this is really important. And it's something, especially if you're doing your books yourself, I would check this even if you're working with a professional that's doing your books, because I've seen things coming from CPAs that have this. So very important. Like you can even go in and do this yourself just to check the work of if you're working with a professional. Do Danielle or Bet, do you have anything to add to this?
No, the only thing I would add is, if you are working with somebody currently, I would just verify how often they are updating your transactions. For our clients, we do this on a daily and a weekly basis so that if they ever call us with any questions, we're prepared and able to answer those. So if you are working with a bookkeeper, you may want to reach out and see how often that's uploaded, especially as you go through your programming. You're going to be asking a lot of questions of your bookkeeper, and you want to make sure that they'll be able to provide that for you on a timely basis.
Yeah. That's another thing and somebody in the questions had said, what are the questions that I should ask of a new accountant?
Yeah,
so
that's definitely one of them.
They update, and, and with Butterfly Revolution, it's in our contract that the client delivers documents by a certain time if they're not using an automatic feed, and assuming they deliver by the 10th, that then it's completed by the end of the month, and that, it could be updated more frequently, but that it is in the contract that it's going to be completed by a certain date as long as the client delivers what is there. And there's that's another thing that I see in terms of work coming in, is that with clients that come to me, is that their accounts might not have been updated for 6 months, 9 months, which is going to affect you in terms of your ability to make decisions and
absolutely
things like that. So, and then Bet gets people and she's like, I can't do your taxes, your books haven't been done for last year. What do you want me to do with this?
It happens.
Okay, so cash management. So I'm going to read through this and then I'm going to do any interpretation that's necessary. Because this is actually, I think this is a multi-pronged question. So any tips on how to beat prep for client orders, especially those on payment plans like layaway, but do cash accounting to balance books. For instance, if a client pays 60% down, then makes 3 payments in February, March, April, when am I entering in order with designer time to best meet cash flow needs, but not end up in trouble? And do I pre-enter into my P&L pending payment on track aside for my P&L? Hope this makes sense. Okay, so I think that there's the notes I wrote on this is that there's a lot of ways to get into trouble. So I think we have a few answers for this. And the first answer, both Danielle and Bet had a lot to say on this. I wanted to throw my first answer in, is that one of the ways that we don't get into trouble in terms of cash management is with Profit First. So we are dealing with one of the ways to not get into trouble in terms of taking deposits by creating a deposit hold account. And that is a bank account where we set aside cash in the bank for customer deposits. So, and that is a little bit separate from what we're going to talk, and there are members in here that are doing that. We base it on the cost of goods sold number, which people may already be at setting aside. So that often hovers around 50%. A little bit below 50% is where most stores are at. But we base it on by doing an assessment of people's books and doing a rollout plan. So some people are already setting aside that amount. Some people are working towards setting that aside. So this might get a little bit confusing, but we have a couple other ways of not getting into trouble. Some of those are actually in the financials and in other ways. So I think that Danielle, you had something to say about this. Deferred revenue.
Yeah. Yes. Sorry. I think that, and you really do need to make sure that you stay on top of this. But when you have this sale, when you have that order that comes in, to make sure that you put that in as a deferred revenue account, which would be on your balance sheet, and then when that sale is complete and those layaway payments have been made and they actually pick up that merchandise, you can then move those revenue dollars from your deferred revenue account and move that to your sales. When you look at larger businesses, there's a lot of guidelines about recognizing revenue too early. So as you grow, you'll want to make sure that you're recognizing the revenue in the correct years, depending on your tax situation. But I think the deferred revenue way is a great way of keeping track of it for accounting. It's not as much of a cash management strategy. I think what Ingrid, the Profit First method of being able to have that separate account altogether is definitely the way to go. But this is more of an accounting way of keeping track of it.
But did you want to add anything?
I mean, I think once you get into situations where you're taking these deposits, I think that automatically kind of makes you graduate from the cash basis for your books to accrual. So, if you're in this situation, I mean, unless you're really, really, really tiny and you're, not even hitting 6 figures yet, and you can kind of keep an eye on individual sales. So, you just started. I wouldn't do this. You're setting yourself up for so much trouble. And QuickBooks has methods for handling these situations. Whether you're creating in the AR, sorry to cross over to the accounting side.
So they're mostly in Bridal Live, and Beth can speak a bit to that too. But
right, I'm sure that has the way to handle it.
Deposits.
Right, but even just on the QuickBooks side, you don't have to have this all go right into sales, which is where they'll go if you're handling it all cash, cash accounting like that. So, it's a cumbersome way instead of letting kind of the accounting system and probably Bridalive also, instead of letting them work the way they're supposed to, you're kind of making it harder for yourself just from the accounting perspective. But the thing that is important to know is if somebody is paying you towards this, and you're receiving cash, if you're a cash basis taxpayer, then this is okay for your taxes, but it's not how you should track it for your books. You should switch that to accrual.
Yeah. So, and I want to add a couple things in here. So Bridalive actually requires you to do your books as accrual-based accounting. And just to kind of underline this, you can do your books as accrual-based, which Bridalive requires you to do because of this. And then you can file your taxes on a cash basis.
Yes.
Which then, say you go to Bets, she would be like, we're filing your taxes as a cash basis. What she's going to do, she's going to go into your QuickBooks, she's going to run your reports on a cash basis.
Actually, I actually run them on an accrual basis.
Okay, whatever you do, whatever magic you do.
A million years ago, when I first started using QuickBooks, and don't let the blonde hair and the tan fool you. I've been using QuickBooks for a long time. It used to, QuickBooks used to not work so well, and you couldn't really run cash reports. You'd get like negative AR and other goofy crap. But I still take accrual reports, even when my clients don't have these kind of issues. I make them all run accrual. When someone sends me cash basis reports, they know go back and run it as accrual, because you never know when something like a situation like this came up and you need to make sure that it all got accounted for properly on their books, and then how to treat it properly for the taxes. So yeah, you can have that disconnect where your books are one way and your taxes are another, but keep your books on accrual for this stuff. It makes your head explode otherwise.
Yeah. Okay, so we probably just confused a lot of you.
Yeah, we did.
But don't do this. What this example is showing, don't do this for your books. I think that's the bottom line. Let Bridalive do it the right way with the deferred revenue and handling the payments, and keep your QuickBooks on the accrual basis. The CPAs can fix that for your tax filing to make sure you file properly on a cash basis. It's a little technical how we get from one to the other, but make a mess.
And what's important here is that what Danielle said about that you want Bridalive just to be mapping to the correct account, so a deferred revenue account. And for those of you that are doing Profit First, that is separate from having the bank account where you're actually setting the cash aside. All that is a bank account. So you can be putting cash somewhere, but you can also be accounting for it in terms of when you're accounting for deposits that come in and coding it as deferred revenue rather than as a sale. Hope that made sense.
The questions didn't go up by large amounts, so that's good news.
Okay.
Or we
made
lost
all their
everybody.
heads explode. This is a problem.
Okay, so and then we have two more questions, which are, I'm going to do at least one more, which has to do with exit strategy. I know a lot of people are thinking about this. And the last one, I think we answered a lot of elements of it. But when the time comes, I want to know the proper preparation for selling my store. I just wanted the proper preparation for selling my store. So, and I want to say, and Danielle and Bet had a lot of nuanced points about this, but basically I want to say that the proper preparation for selling your store is making it look financially healthy. And, The only thing is that the priorities, the timing might be a little bit different in how you do that, but making it look profitable, paying yourself. They want to see that the owner is being paid. They want to see that it's profitable. What am I forgetting? I'm not even looking at my notes, but they want to see inventory. And this might be a little bit more nuanced because they want to see inventory. Now, I'm going to say that depending on the buyer, they might not be taking a very detailed look at inventory. So, and depending on how soon you're selling the store. So this is where I'm saying like the order of operations might be a little bit different, but just like I'm always going to say like, increase your margins, like work on your financial health. But, doing a huge sell off of your inventory right away, like if you're selling it off for, 2 cents a dress, might not be the best move at this moment. Like, but other than that, like, making it look good. And the other thing I'm going to say, and I think, Beth, this is something that you could really speak to as well, but think about when you bought your store. I mean, who are the people that are buying your store? They're people like you. They're like people in this community. And think about what you were thinking about when you bought this store, your store. So they are going to be looking at your financials. They're going to be looking at the P&L and the balance sheet. So those are numbers that you can only control by increasing your financial health. But you're also going to have a brochure that they're looking at when you sell them. And you can control what metrics go into that brochure. So choose the metrics that really underline the things that underline the things that make your store look good, the things that speak well to your store. The other thing that they're going to be looking at is the strength of your team. Is your team coming with you when they buy the store? So, things like that. But Danielle and Bet had some really great points. So I want to hand it over to them to kind of get into more of the details.
Yeah, I'm going to have to jump in a minute. So I will just quickly run through a few of the just really to add on to what you were saying. Number one is to make sure that you have good bookkeeping that's easily tracked, that you can very easily verify those numbers. So you want sales numbers that can be backed by good data. I would suggest reducing that slow moving inventory. Again, like Ingrid said, not if you're going to sell it for pennies, but if you have slow moving inventory, if you are able to make a deal and get that inventory moving up and out. If you have any accounts receivable outstanding, make sure you collect on those funds. Systems is another big one. When you're purchasing a business, you're purchasing the team, the inventory, but you're also purchasing the systems. Do you have a well-oiled machine? If you have any issues or any workarounds, see what you can do to make that a more efficient system. And then make sure that you assess the value of your business. Work with your bookkeepers, your CPAs. There's some online tools to help you value your business. That way, how much your business is worth, and you can have a thoughtful conversation with potential investors and potential sellers. You don't want to go into a situation where you don't understand the value of your business, and therefore you're not able to have that thoughtful conversation.
Bet, did you want to add anything?
Yeah, I'll throw a few more things in there. So, especially when you come to taxes, we talk about two things. You can sell a business you can sell the assets of the business, or you can sell the ownership of the business. So if you're trying to get out, are you saying, listen, I've got all this inventory, I've got these fixtures, maybe even I got the software, I have this customer list, and take that, kind of bundle it up and say, here, does someone want to buy these assets? Or maybe you've built a great reputation, you have a nice location, a gorgeous store, a great client list, and you want to go to someone and say, hey, do you want to buy my store? So it's like it's subtle, but it could change how people would perceive the sale itself.
Including
Also,
and I want to add into that specific for bridal, so including the brand, the integrity, like, are you in your region? What are the reasons that your customers, because you don't really have repeating customers, but what are the reasons that your customers are going to go to you over the other people in your region, in relating to systems, so your advertising and marketing? Are they stepping in and having to create all of those systems for advertising, for marketing, for attracting customers, for visibility? Or are they stepping in and it's like that's already done for them? And how are you communicating that to them when they're coming in to try to buy the store? Because if you're not communicating it, they're not going to know.
Yeah. Right. You have to show them that.
And if they're looking to buy other stores, help them not, give them that answer.
So a couple other things that you might want to worry about. I mean, I have a retail client. It's not in the bridal industry, but they bought a motorcycle retail store, and they didn't have good numbers for their inventory. And it was a husband and wife. They're a little older. They're Canadian. They literally live and breathe this business, and it took them like 2 years to figure out what all the actual inventory was worth, and found out a lot of it wasn't so valuable anymore, and they've been having to dispose, or they're trying to sell it on eBay, and now they're like, we don't want to do this anymore, because they literally work like 100 hours a week and they want to sell it. They're like, oh, we're going to sell it to our manager. Well, part of the problem is, and Ingrid, you mentioned this, those owners don't pay themselves out of the business. They want to sell it to the manager because he knows the business. But I said to them, like, listen, guys, who's going to do all that inventory work now? He has to hire someone. So immediately the business is not as profitable as you make it sound like it is, because you guys aren't paying yourself. So he's going to have to bring in someone to do inventory. He's going to have to bring in somebody to do all the bookkeeping, because the wife happens to do all the bookkeeping. And no one's going to be as dedicated as they are, where they literally live there in their RV on the property and work it all the time. So, and this is a profit first thing, where you need to make sure your business supports you, and they're not doing that. And it's going to kill their ability to sell, because they haven't made sure that, like, yeah, it looks profitable right now, but once you have to add in all that payroll, it's not going to be. And a couple other, random things. If you've got a lease, you got to make sure that the new owner can take over the lease. Sometimes they're not transferable. And if you developed personally vendor relationships, you're going to have to make sure you can transition those vendor relationships to the new owners, or you can have some issues there also if they can't get the inventory that you used to get.
Yeah.
And then how do you want to finance it? Are you expecting to walk away with, a check? Like, I just want cash, or, the equivalent, and I don't want to have a loan. I don't want someone making payments to me. And you might not be able to do that. Who knows? But the more you know about what you're looking for, it's almost like when you're marketing to your customers, right? When you're trying to sell the business. If you know the profile of the person who you want to buy your business, it is easier to find that specific person.
That's a great analogy.
And don't undervalue your business, please.
Yeah.
Oh, yeah.
Know your numbers. Know what it's worth.
Yeah, and I think that all of this, this is as much of a conversation about like how to buy a bridal store as how to sell a bridal store. But, it all goes to the point of like, being in control of the numbers that you're presenting as well. So based on the inventory that you have, okay, do you have a huge inventory? Okay, so what numbers are you going to present about that? Like, okay, here's my huge inventory. But if you have put a lot of work into really curating your inventory, like that's a huge value. If the only inventory that you have on your floor is inventory that is going to sell, and your margins are really high because of that, like you need to communicate that. You need the numbers to communicate that. You need to show that, like, look, these are the styles we have, and we have shown that, and we have studied our numbers. We know that these are going to sell. These are the margins on these. These are the styles we've got rid of. And we have actually the systems in place. We look at these numbers every month. We're going to hand this over to you. So that they know that, like, when they buy this store, everything's set up to do that. Versus, like, maybe they are looking at a store that has, you know, a 1,000 dresses that are like all lined up in the back room. Is that more valuable or not? So I don't know if we answered the question, but you know, there are certain challenges that come with too many dresses, and you know, there's stores that are trying to get on top of that. So somebody that's buying a new store doesn't necessarily know that. So depending on where you are and what you're trying to sell, you need to communicate the value of what you're providing.
And Ingrid, just to add on, this is a long-term strategy. So what if your exit strategy for your business is to sell your store, you know, really start thinking about that now, so that you can start putting into place the systems, the pay that you need, because they're going to look at those trends over time. So this isn't something that you could do within a few months. You know, this is a long-term game that you really need to have structured out.
Yeah, but it's, you know, it's true. I mean, business is a long-term game, but at the same time, it's like, you know, we're all just moving forward with what we have. You know,
absolutely,
so,
yeah.
like,
oh yeah,
you know,
yes, we are.
Like, just do it, get it in place, work with what you have. Like, we all are where we are. So look at the assets that you have, look at what you've built. Like, everybody's doing the best that you can. So just look at what you have. If you have a great team, highlight that. If you have a wonderfully curated inventory and a beautiful floor, highlight that. Like, you know, if you have great systems, highlight that. So, and always work on the long-term game, you know, and then when you're ready to leave for whatever personal reasons those are, just move forward. Like, don't wait because it's not perfect yet. But always recognizing that it is long-term, that it, you know, and the person that steps in, there's always going to be work to do.
I've been so busy.
Okay, so I know, Danielle, that you need to.
Yeah, I got to jump. I do have a 1:30. Ingrid, thank you so much for having me. If there's any other questions or anything that you need my input on, happy to help.
Yeah, thanks. And I will see you back here at 7.
Okay, perfect. All right. Bye, guys.
Bye.
Bye.
Okay, so somebody asked, one of my employees is getting married and I want to pay her dress via wages. Can I do this pre-tax deductions for her? Bet your answer was no.
No.
Post-tax.
Yeah.
So that was easy. Then there was this somebody asked a question about a long Facebook thread. Basically, it was whether samples should be inventory or cost of goods sold, which we already got into. But I wanted to point out, then there was a horrible IRS audit in here. I think from what I can interpret that, you know, there was something happening where deposits were being counted as cost of goods sold. Sorry, I can't remember. But I just wanted to pull this up just to underline the importance of getting stuff right. And that you can't treat deposits as inventory. Like, things need to go in the right place. So it's important because not only are audits expensive, but they're time consuming. They are just a royal pain in the behind. So I just want to bring that up. And also, Facebook can be a really confounding echo chamber of often not correct information. So I want to warn you against that too. And I'm going to jump back in and just see if there's any other questions and stuff that we could answer. So a line item for donation, damaged and sample. Okay, wait, these are older. Okay.
Yeah.
This is more of a comment. Christina said, I try to do this daily while having my coffee. At the end of the month, I run P&L and review each general ledger account to make sure I coded all expenses correctly. I use the bank feed for all income and expenses. Then you reviews the balance sheet. Okay. I think we answered all the questions in the Q&A. I think we answered everything. So, yeah. Okay. I think we answered everything. So I'll follow up either tonight or tomorrow with a link for any of you that want to work with us. Beth, did you have anything to add?
I don't think so. I think you guys answered most everything. I think one of the biggest questions is how to categorize inventory and samples. So that you guys covered that, which I think is really important. And whether it makes sense to donate, because that's always a big question. How should you get rid of old inventory? So that's always a huge question. So, of course, selling it is always the first best way to try to sell it somehow, or consign it and have someone sell it for you.
Yeah. And probably most people, well, we actually have it mixed. So a lot of, I can't see who all the attendees are, but probably most of the White Dress Society people would know about the style locator. There are some people in here that are not part of the White Dress Society, but the style locator will help being able to sell the inventory. So if you're not part of the White Dress Society, definitely the members of BBG, the BBG Financial Mastery Series would know about that. If you're, well, I will announce it in there. If you're not part of either of that, the Style Locator will be coming out soon, which is a way for people to sell off older inventory online. And so that is going to be really exciting. So to increase the margins on that. So,
and just to be clear, because there's a little bit confusion and there's some schools of thought that have been frustrated thinking that this style locator is just, why would we want to go online when we're saying we're trying to compete with people online? But essentially, we're competing with. There's two benefits of the style locator. One, it gives you a vehicle to sell off sample inventory in your store, and the beauty of it is you can hold the inventory in your store, and Sample Locator does all of the hard work for you. So they do all of the advertising of your samples. They are working behind the scenes to figure out where it gets promoted on Pinterest, Facebook, on their own website, on Instagram, so it's easy for brides to find those styles. They send you the shipping label and you send it off and get a sale.
And it's not current designs.
It's your samples. It's a way to liquidate sample inventory. Yes, it's anything that you've decided, I no longer want to sell this dress. I want to sell it as a sample sale. And we all know sample sales are not what they used to be. So it's just another vehicle that you would probably do in combination with having your own sample sale, with doing consignment, and then also maybe doing the style locator. And it is a way, if you are a store that is competing against online retailers, it's a way for you to put your toe in the water and compete directly against them and get some online e-commerce without having to fully invest in it in yourself. So that more information will be coming forward with that. It's probably launching hopefully within the next 3 months. So there'll be a lot of information about it on the White Dress Society if you're a White Dress Society member.
Yeah. So if you're not, then join the White Dress Society Facebook group so that you can be sure to get it. Exactly. I mean, you can reach out to me too, but
yes, or me, either way.
Yeah.
Yep.
Okay. Well, thank you all for coming, and I hope that everybody got on that was able to. But yeah, feel free to reach out to me. I'll send a link if you want to do a discovery call with me so that we can figure out the best way if you want to work with us to to help you out with your accounting if your brother isn't doing it. And for those of you that I do see regularly, I'll see you soon. And thank you all. Thank you, Beth. Thank you, Beth.
Thank you.
Thank you.
Have a great day.
Bye, guys.
Bye.